across to the key sector that we're focusing on today on the show, which is the realty sector. Stocks have been on fire. They've been zooming. There's a huge amount of investor interest in the real estate space, and it's driven by the whole revival theme. It's driven by the IT boom and the increase in salaries in the IT space. The assumption is that all of these high-paid employees and individuals will now go ahead and buy homes. And yes, there has been an increase in registrations, if you see, year on year and over the last 6 months. But is it really reflecting the ground reality? First, let's get an idea of what the stock markets are doing and seeing in the real estate sector from my colleague Vivek Iyer.
Well, one particular space that clearly stands out in terms of market outperformance is the real estate pack. Once the pandemic did hit, it appeared as though it would not be over as far as realty is concerned. The sector had taken so many shocks in terms of demonetization, RERA, GST, and also given the fact that the entire NBFC crisis took a deep hit as far as the entire realty space was concerned, especially when it came to smaller developers. But very surprisingly, post-pandemic, some state governments did give stamp duty cuts, and also given the fact that select sectors, especially the IT sector, doing so well, actually enabled a whole host of demand to actually come back into the system. So now real estate companies, today we had Goddess Properties on the channel, they actually said that after almost a decade of underperformance and the sector being in a downturn, it now appears as though the sector is poised to do very well. What are some of the key reasons? We understand that number one, smaller developers are out of the picture. There is significant consolidation that is happening amongst the larger players. So larger listed companies continue to gain market share. Along with that, given the fact that demand is so strong, some of the companies are now have the confidence to undertake small and slight price hikes as well. Inventory levels have gone down significantly, and also given the fact that affordability is an all-time high, especially as mortgage rates are at a decadal low, all of this is playing out as the perfect storm, and which is why real estate stocks are doing so well. Some of the companies have almost doubled. In fact, when you're talking about some of the names like Sobha, a 96% jump, IB Real Estate, a 75% jump, Brigade over 50%, these are the stocks that have clearly outperformed.
Now, the important thing to remember is that listed companies in the real estate space, those that you find on the indices, are a very small representation of the entire sector as far as the economy goes. In fact, even today, we are a economy where the real estate space is not necessarily dominated by the largest players. Yes, they get the most attention, but by and far, it is smaller builders, smaller developers, mid-sized developers, which form the bulk of the sector. So, is what we're seeing in the equity markets a reflection of what's happening on ground? Let's try and get a sense of that. Vikas Wadhawan, Group CFO of Housing.com, Makan.com and PropTiger.com joins us on the show this evening. Gulam Zia, Executive Director of Knight Frank India, is with us. Dr. Niranjan Hiranandani, co-founder and MD of Hiranandani Group of Companies, is joining us, as is Prashant Bindal, Chief Sales Officer of Lodha Group. Welcome to all of you, and thank you so much for speaking with us today. Gulam, let me get an idea from you first. The basic question that we're posing today and what we're trying to find out is that, is the same kind of red hot streak really being reflected in ground realities?
First of all, I would take an exception to the word red hot streak, because it is giving a different kind of an indication altogether. I would not use that word straight away, because while we are talking about some amount of exuberance because of deal volumes, transaction numbers shooting up pretty much all across the region and all across the segments of residential real estate. However, we are yet a bit too far from the words that you're using. It's not really that red hot as you would want to believe. So there are positive signs, and
So Gulam, just let me interject here. Let me interject and clarify. I'm talking about, like I said in the introduction of the program, I'm talking about the performance of listed real estate companies and the way their stocks have risen in the markets.
Absolutely.
Based on exuberance from investors that things are really great. So for example, the BSE Realty Index has gone up 35%. So you're actually answering exactly what I'm asking. Is that excitement in the markets being reflected in truth with what's happening on ground? Please go ahead.
Well, I would say there is definitely a multiplier effect. As I was talking earlier, what you're talking about, if it is restricted to the share market, if it is restricted to the listed players' performance on the browsers, then obviously what you're saying is perfectly right. But if you talk about the ground realities, of course, the ground realities are far, far better than what they were for almost half a decade behind. And that is why I'm sure the stock analysts are also reading between the line as to if so far during the second wave, and actually in many of these markets in the middle of second wave, we did see huge amount of uptake in pretty much most of the markets. So I'm sure somebody would be calculating that if in the worst phase of COVID impacted economies, if we are looking at so much of an upswing, then when the things are falling in place, when the vaccination is really reaching a phase where we can satisfactorily say that we have arrived with all so many things happening positive, then obviously going forward, we may expect some multiplication as well. But on ground, the reality is definitely there are transactions happening and much better than pre-COVID numbers. And in many of cases, like especially in case of Mumbai, the August numbers, the transactions, sales transactions were best in last 10 years. The July numbers were once again best in last 10 years. I'm talking about month on month. So these are clear indications that we are watching enough numbers to convincingly say that on ground realities are changing and fast.
Okay. Are they changing at the same pace? That really is the question. Vikas Wadhawan, what are you seeing? And beyond, your regularly well-performing markets, Mumbai, Bengaluru, etc., are you seeing a wider, more secular improvement in the real estate space?
Absolutely, Tamanna. I think the recovery in the real estate market is very, very secular. And there are multiple trends or reasons behind that. If you see that with the pandemic, a lot of people gone to their hometowns, a lot of reverse migration happened, which helped improving the demand in tier 2 and tier 3 cities. Even with the onset of pandemic, what people are realizing is that they need a bigger home. They need homes with a larger space. They are looking for plots. They're looking for villas and independent houses. And they are fine staying slightly away from bigger cities. And that is why suburban areas are also in high demand. So the overall sentiment is very, very secular, I would say. To answer your first question, whether the stock rally which is happening in the market, is it the reflection of activity on the ground? I think it is a combination of multiple factors. One is the recovery, which is a strong recovery in the real estate sector, which we've seen over the last 12 months, barring those 2-3 months of second wave. But the strong recovery in real estate sector. The investment sentiment in real estate sector is coming very, very strongly. A lot of people are seeing when equity is very, very hot, as you said, they are seeing that what is an alternate investment where they can put in money. And real estate is one of the safest investment in the market. So these are some of the things which is driving a lot of demand in the market.
Yeah. Niranjan Hiranandani, I think you were one of those people who was sure from April of 2020, when the world was in chaos and despair, you were very sure that real estate would do well. And it seemed baffling at that time that you were so sure that people will buy bigger homes to stay in. But does it seem now, over a year and a half later, that that trend has indeed been playing out?
Tamanna, that is absolutely correct. What has happened is we quickly realized when the COVID, people were incarcerated in their homes. It was unbelievable. People sitting at home, husband, wife, working on the video communication, children doing their schooling and colleges through the video communication. Obviously, the requirement of homes and houses was better, bigger, and wanted better quality homes also and safer homes. This absolutely showed on the ground, and it really happened very quickly. Of course, it was only available for people who could afford it. But many of the people before the pandemic did not anticipate that they want to actually go for incremental larger houses. So across the board, across the country, we found that people were upgrading 1 to 2 bedroom, 2 to 3, 3 to 4 also. People who had two bedroom brothers staying together moved to separate houses and stuff like that. Of course, again, for two reasons. One, the interest rates are very low, less than 7%. With inflation at 5%, the net effect of interest is less than 2%. Plus, if you get a tax relief, then you're actually, the banks are paying you money to actually buy and take deferred money. So in reality, the combination of the need of the market, A, B. I again put a rider to it. The rider is that there were many fields where people lost jobs. So there was people in aviation, people in tourism, people in MSME sectors, even media. So many people lost their job. Many people got haircuts. Those, of course, could not buy, and they had a problem even paying their EMIs. That's why many of the companies had to give a short relief during this period, sanctioned by the Reserve Bank of India to give relief for a temporary period of 6 months and 9 months, which people are objecting to. But in reality, this was necessary because those people who don't have that income in that period could not pay. So there was a difficulty not only for the developers, but also for people to pay installments to the developers in that period. So in reality, we did find an uptake into the economy. And fortunately, even people who did the second sales actually had good sales, which means I want to upgrade from 1 bedroom to 2. I'm able to sell my 1 bedroom at a good price and buy the 2 bedroom too. So all this combination of things took place in the marketplace, and many of the unsold stocks. You remember, Tamanna, last year when we did the unsold stocks, we had almost 6 years stocks lying unsold. Now that has been brought down to almost 3 years stock.
Yeah.
So I think a huge amount of stock, unsold stock contraction has taken place. And of course, I'm not talking about those projects which are stuck like the NCR and other regions, but otherwise, very big improvement both in the marketplace and also the economy as a whole, I think has made a turn. Only fear the third wave.
No, absolutely, which is why we talked at the beginning of the show about how crucial vaccination is and keeping up that pace of vaccination and reducing the gap between doses as well. It is, in a sense, connected. Prashant, great to have you on the show. You're joining us on this program, I think, for the first time. What is your take? What are you seeing, and what categories are actually coming out and buying?
Actually, what Niranjan said is absolutely right. I think he really said that very, very correctly, that there is a genuine demand for housing. The housing sector was, and I'm sure Gulam would know it much better, it was waiting to break through. It was waiting to break through. A lot of good things happened in the industry. You see, all those things that you talked about in the beginning, demonetization, GST, RERA, all these pecked the sector back, but it brought in a lot of transparency in this sector. And that was very, very good things to happen. It may have brought back the sector back, but it ultimately led to, the positivity in the whole sector and giving a lot of confidence to the consumers about the whole sector. And what also happens is, and it just needed a trigger, and I think that trigger was COVID. What happened with trigger, and as you would have seen with the other segments also of the consumer segment, whenever the crisis happens, the consumers move towards stronger brands, stronger products, where they feel security. So what happened is that when this trigger happened, there was a genuine demand for need of housing, which was not there. Earlier, the discussion used to happen was like an Excel sheet. What is the per square feet rate? What is the lowest size house, especially in a place like Bombay, so that we can buy the lowest. It is not only the sales, but the quality of the sales that is happening. The lowest size house can. We had units with decks and balconies which were left for years. Nobody would give them even 20% additional for such a benefit. And in last 9 months, what has happened, we have not a single unit anywhere left with a deck on a balcony. That's the first demand. And ready to move in houses, people never used to value the ready to move in houses. Every house which will take 5 years to build so that they can keep paying money for 5 years and they don't have to pay upfront. Now the first demand is the ready to move in sales. Ready to move in sales. And so, it shows a very, very positive. Talk about the frenzy at the BSC Realty Index. It actually, the sale had started 9 months earlier. So it is actually happening late. So, and what we see is that it's a very consistent business and across the categories. Earlier, what used to happen was that affordable segment was, of course, doing well because of the low mortgages rate, but the premium and the luxury sector was the one which was lagging behind. But what has happened in the last 6 to 9 months is the real jump in the premium sector. I'm sure Niranjan would certify that he's one of the best premium players. That across the premium category, the jump has been very significant, and that has come from the very genuine demand. And you see consumer behavior and you can feel it. And one of the difference that we can see is the role of the women that has come into real importance. Earlier, it used to be a discussion only on per square feet and Excel sheet calculation, a per square money feet. And the discussion on amenities, the discussion on aesthetics, that was hardly there. Just give us the cheapest price. Just give us the cheapest price, or when are the prices going to fall? Now the whole discussion is, what are the amenities? What is the product about? Now the 50% discussion is on product and 50% discussion on price. When that kind of a discussion starts and across the segments, then you realize that demand. And when it happens across the geographies and across
now, but
categories,
sure. Yeah, so that's the important thing. You're saying it's across geographies, across categories. Is it also across kinds of developers? Gulam Zia, let me come back to you. We're also hearing a lot of reports about consolidation. Now, clearly, COVID-19 has not been great for all players in the real estate market. Obviously, the first few months was just terrible. There were already a huge chunk of developers who were finding funding difficult. The ILFS breakdown didn't really help things, funding dried up, and then you had schemes coming in from the government to bail out certain players. So do you think there's a lot of consolidation which has happened and will already happen, and that is also fueling investor sentiment? What the market is betting on essentially is that you're going to have lesser players over time, dwindling inventory, and higher quality developers. So it is going to be a seller's market over time.
A lot of these things you have brought together to very clearly explain what's happening on the ground. However, one thing I would definitely want to talk about is the phase where the mid to low end developers who were either troubled due to lack of sales and due to the issues related to financing and capital availability, etc., have been falling out. And that's very clearly evident. And that's happening actually even before COVID. And that's where a lot of these established, well-placed brands have actually done a lot of those cherry picking up the projects, etc. Well, let's also not forget that a few of them have actually gone overboard and taken up much more than what they could really digest. And one or two such cases where even those the big players who came on to this with a big bang have also suffered. So net, the result today is very clear that the branded players are the first ones to feel the exuberance in the market. They're the ones whose wares are selling much faster than the rest, and it is reflecting on their revenues and overall businesses and so on. However, the rest of the players are not as well placed as we would want to believe, and that is where the concern continues. As we talk about the fund that the government had created to take care of the projects which were affected or which were stuck up is also doing a lot of work, and their plate is also full because the kind of projects which are falling on their plate is also not reducing at all. So the point is the gap between the good players and the rest of them is widening a lot. But that is not straight away having an impact on the inventory. In fact, in last 6 months, we did see inventory jump up by about 8 to 10%. And that is directly related to the good developers also realizing the possibility of pushing more wares in the market. And that is evident. So the point is that, those who are not really capable of managing the business as well are falling out. Those who had the competencies, those who had the capabilities, etc., shall remain. Well, going forward, I'm sure when the markets are bouncing back to full conviction, I'm sure a lot of these players, the big players, will also come back when the markets improve. But at the moment, the consolidation phase is also behind us. It is right now good developers focusing on increase the inventory, which is good for the industry. Back to you, Tamanna.
So how is that going to impact real estate prices? we have been seeing one of the reasons for all of this excitement is that affordability is at higher levels than in a very, very long time. Niranjan Hiranandani, let me get you to answer this. Is real estate going to get dearer? If you're seeing the turn of this cycle, will those prices which have been pretty much flat to negative for the last several years, will that also start changing?
Tamanna, bad news is that the prices will go up. The bad news is there simply because the cost of inputs have shot up the roof. So steel prices, cement prices, product input prices, cables, lifts, you name the items, glass, all the rest, fuel, everything is going up tremendously. So ultimately, especially in the case of the affordable segment, I'm afraid, Tamanna, that the prices are more likely to go up faster for the simple reason that cost of inputs of construction becomes a large part of the total cost in terms of sales, and that definitely will go up. However, there is a lot of stock which is still available with people which are unsold, which may have been on the basis of old cost input. So probably they would still be able to sell it at a price which is presently happening. But as stocks go down, last week I was doing a review of my own company, and I asked them, I said, why is this dip in the sales which has taken place in this particular segment of the market, which was doing extremely well? And you know what the answer was, Tamanna? We have no stocks in this segment. So obviously that is what has happened. Some of the segments, and this was reconfirmed by Mr. Prashant and Gulam, both saying that the segmentation which has taken place and improved and the sales have really picked up are definitely going to cause a difference in terms of it. Quality of goods on one side, affordable segment on the other side. We're going to see price pressures going to take place. However, again, there is one rider. We will have to see how the overall growth in the economy takes place. My gut feel is that the predictions, which are only 9.5%, are going to be beaten. And I think we will cross 10% plus by the end of the year, or at least by the January or February of next year. And if that happens, you're definitely going to see a price rise, which is going to take place in the next quarter. So this is my guesstimate. Of course, this is also subject to what happens in the third wave, which is coming in very quickly. Kerala has started it. Mumbai sees a little pickup today in terms of numbers. I'm afraid this Ganesh Chaturthi may be a difficult time for Maharashtra and Mumbai, and we probably see more COVID cases by the end of the month. And if that happens, then again, I'm not able to say anything. We may have to again correct the situation according to the marketplace.
No, clearly nobody can predict what will happen, but I think one thing is for sure: input costs have gone up in every segment, and real estate is no exception. Everything is now costing more. Steel, cement, and those basic building blocks now cost more. Vikas Wadhawan, give us perspective to pre-pandemic, to 2019. 2019 was a peak year for real estate after a long time. And then, of course, the pandemic took place. Now, all of these sales figures everyone's talking about, registrations, a lot of them bumped up, remember, because of, discounts and incentives in registration rates that a few states gave. But all of that, how does it compare with pre-pandemic? Are we at those levels? Are we close to those levels? Have we crossed those levels?
Absolutely, we've crossed those levels, Tamanna, and there might be few markets where we're still kind of lagging behind in terms of recovery from pre-pandemic level. But overall, clearly, what we are seeing that the activity in the market is definitely inching towards or has already crossed the pre-pandemic level. I want to also pick up the point which was discussed by Niranjan ji, that even if the prices go up, the demand sentiment, you look at the last 5 years, Tamanna, when the prices were not going up, it was not impacting the demand sentiment. The demand sentiment was also low. I think that now the demand sentiment is picking up. Even if the prices will go up, I think it's going to further accelerate the demand sentiment, because home is the very important buy for a consumer, and they want to see the prices rising, right? And if the prices are not rising, people always gets jittery about, oh, what's happening in the market? Should I invest in real estate or not? Should I wait for maybe another year to buy a home or not? I think if the prices will start gradually going up, it will be positive for the sector, from investment as well as from an end user perspective.
Yeah. Well, real estate is always an exciting sector because it has so many connotations. It's a huge employment generator. It's also, in a sense, gives you an idea of what's happening in the economy. India is always viewed closely for real estate because it has a large section of people, a young population that need to grow, buy houses, and so on and so forth. So, exciting times ahead. Thank you so much to all of you for joining us on the discussion here.
Thank you.
Thank you.
Thank you.